Bitcoin holders are hitting the sell button, and $105,000 has become the digital asset's final line of defense. The world's largest cryptocurrency just delivered a masterclass in market psychology. After surging nearly 4% to $117,300 following dovish comments from the Jackson Hole Symposium, Bitcoin's celebration was short lived. The euphoria lasted exactly 48 hours before reality set in, sending prices tumbling back to $110,600. What we're witnessing isn't just another routine correction. This is a coordinated distribution event across all wallet sizes, painting a concerning picture for Bitcoin's immediate future. Here's what the data reveals. Every single Bitcoin wallet group has now flipped to selling mode. From the smallest retail investors holding fractions of a Bitcoin to the massive whales controlling thousands of coins, everyone is heading for the exits simultaneously. This synchronized behavior is rare and historically significant. The 10 to 100 Bitcoin wallet group is leading this exodus. These are your sophisticated retail investors and smaller institutions, the smart money that often signals major market turns. When this group starts selling aggressively, it typically cascades across other market participants. But here's where it gets interesting. The 100 to 1,000 Bitcoin wallet group is split right down the middle around $105,000. Half are accumulating, half are distributing. This creates what analysts call the last stronghold, a critical support level where the market's fate hangs in the balance. Why is $105,000 so crucial? Let's look at the realized price data, which shows where different groups of holders bought their Bitcoin. Recent buyers, those who purchased in the last 1 to 3 months, have an average cost basis of $111,900. They're already underwater and feeling the pressure. Compare this to longer-term holders. Those who bought 3 to 6 months ago have cost bases around $91,630. The 12-month holders sit even prettier at $89,200. This creates a dangerous gap in market support. If Bitcoin loses $105,000, there's essentially an air pocket down to $90,000. No dense network of buyers exists in that range because most recent accumulation happened much higher. This could trigger what's known as a capitulation cascade, where over-leveraged recent buyers are forced to sell at any price. Seasonal patterns are working against Bitcoin right now. We're entering Asia's traditional Ghost Month, running from August 23rd to September 21st. Historically, this period has delivered an average decline of 21.7% for Bitcoin. In 2017, Ghost Month produced a brutal 39.8% drop. Adding fuel to the bearish fire, crypto trader Roman Trading points out a critical weakness. Bitcoin versus Euro hasn't made a new all-time high since last year. This suggests recent gains are more about dollar weakness than genuine Bitcoin strength. The post-ETF launch honeymoon period appears to be ending, with institutional enthusiasm cooling significantly. The technical picture confirms this bearish narrative. Bitcoin just printed a weekly bearish engulfing candle, a pattern that often precedes deeper corrections. Combined with the distribution data and seasonal headwinds, the probability of testing lower levels has increased dramatically. So what's the roadmap ahead? If $105,000 breaks, expect rapid movement toward the $92,000 to $89,000 range. That's where the next meaningful support cluster sits, based on longer-term holder cost bases. For traders and investors, this creates both risk and opportunity. The risk is obvious: potential for significant downside if support fails. The opportunity lies in understanding where real demand might emerge and positioning accordingly. Remember, markets are forward-looking mechanisms. While the current data appears bearish, Bitcoin has repeatedly defied expectations throughout its history. The key is managing risk appropriately and understanding that in crypto markets, sentiment can shift as quickly as the price action itself. Stay informed, stay disciplined, and remember that in Bitcoin's world, today's support can become tomorrow's resistance, and vice versa.